Welcome all, and specifically, welcome to the management students currently navigating the architecture of SpherNova. This is not a tutorial. This is an intervention. We are here to reinvigorate your reconciliation with the inadequate curriculum you contend with daily. In this era of pervasive AI, the harsh truth is that businesses need you less than they need a machine. Not because you lack talent, but because you lack the map. You have been shielded from the multitude of factors, the intricate business logics, and the deep data models that have been the true undercurrents of global business for decades. Take a look around your classroom. The case studies on your desk? They are autopsies. You are being trained to be a passenger, someone who sits in the back of the corporate vehicle, nodding at dashboards you didn't build and trusting data you can't verify. Does it not unsettle you that while you debate brand ethos, an AI platform somewhere in a server rack you'll never see is already masterminding strategy, mapping economic variables, and executing complex business logic with a precision you haven't even been taught to imagine? AI hasn't just entered the room, it has made your current curriculum a relic. If you cannot trace a single marketing dollar through a recursive hierarchy into a specific ledger account, you aren't a manager. You are a commodity. Your reconciliation with this technical void is a dangerous ignorance. It's time for a course correction. It's time to move from the black box of theory to the white box architecture of SpherNova. The modern executive must be part architect, part coder, and part economist. Because in an AI-driven ecosystem, the strategist is a bystander. The architect is the only one left with a seat at the table. Let's look at the world through a white box lens. Remember Coca-Cola's Share a Coke campaign? The world saw personalization. But a SpherNova architect saw a logistics masterpiece. To succeed, Coke had to map hundreds of different labels to specific campaign IDs, while maintaining regional dimension accuracy. They didn't just have a good idea. They had a robust data skeleton that allowed them to reconcile global branding with local inventory in real time. Now, contrast that with Pepsi's 2017 Kendall Jenner blunder. A tone-deaf ad pulled in 48 hours. The world called it a PR fail. We call it a feedback loop failure. If Pepsi had been using a white box simulation at the inception stage, they could have linked a sentiment dimension to their campaign activity. They would have seen the outlier event in the data before it hit the airwaves. A simulation isn't just a what-if, it's a stress test for your brand's survival. Pepsi's failure was an inability to sense the real-time event, because their marketing was decoupled from the operational nervous system. Let's look into the data models now. To lead, you must understand the infrastructure of integrated data flow. In SpherNova, marketing isn't a slide, it's a four-tier hierarchy. First is the program, which we have already looked into in an earlier video. This is your strategic anchor. It doesn't hold expenses, it holds intent. It's the parent node. If you don't understand why we separate programs from campaigns, you'll never be able to aggregate the ROI of a 3-year strategic shift. Second is the campaign. This is the tactical container. It's where the budget lives. But look at the actual cost field. It's a calculated value. If you can't write the trigger that updates this field as invoices roll in, your budget is a work of fiction. The data fields include campaign ID, program ID linked to program, campaign owner ID linked to employee, budgeted cost, actual cost, status, and target audience. Every campaign must be linked to a program ID, enforcing a strict hierarchy. Third container is the campaign activity. It generates the how, including social media, events, PPC among other online and offline mediums of marketing. Here we measure target volume versus actual volume. If you can't map an activity type to a location dimension, you'll be looking at national averages, while your local markets are bleeding cash. Let's understand it this way. Success in marketing is the delta between target volume and actual volume. If you projected 10,000 clicks but achieved 2,000, the activity details field becomes a diagnostic tool. This table allows a manager to see which employee is most efficient at specific activity types. It moves marketing from creative guesswork to industrial performance. Fourth container is the campaign expense. This is where marketing meets the general ledger. In SpherNova, the party account ID is a pointer to the global posting map. You don't need to be an accountant, but you must understand how a vendor payment triggers a recursive journal entry. This is the point of truth, where the money actually moves. When a manager selects a vendor linked through party account ID, the system doesn't ask for a ledger code. It consults the global posting map, which retrieves the mapped debit, generally the marketing expense, and credit, the accounts payable, accounts automatically. This white-box integration ensures that the marketing team doesn't need to be accountants, but their actions are perfectly recorded in the general ledger. Now let's peel back the curtain. To move from a passenger to a pilot, you must first master the architectural skeleton of your strategy. We don't start with a catchy slogan or a pretty image. We start with the ledger. We begin in the account module. This is where your strategy finds its financial home. By adding a marketing expense account, you are creating the destination for every dollar of influence. But remember, SpherNova is built on dimensions. This account isn't a dead end, it's a bridge that maps directly to your expense category. Here is where the architect decides, how deep do you want to see? You can use a single generic account for high-level oversight. Or, if your reporting demands precision, you can deploy multiple granular accounts. Social ads, influencer fees, print collateral, all mapped, all visible. Your reporting is only as sharp as your initial mapping. Now we transition to the campaign module. When you initiate a new campaign, SpherNova's engine generates a unique campaign ID. This isn't just a label, it's a digital anchor for every future transaction. Because you've already mapped your accounts, selecting an expense category here creates an unbreakable link between the marketing activity and the corporate balance sheet. But a campaign is a living ecosystem, not a static plan. For every active campaign, the pilot can add specific activities. As you post expenses against these activities, the system executes automatic tax computation. No manual errors. No reconciliation gaps. What you see on your dashboard is now exactly what the CFO sees on the books. You aren't just doing marketing anymore. You are orchestrating a financial system with mathematical integrity. This is the white box reality. This is how the pilot wins. Now let's put the system under pressure. Most students do autopsy marketing, analyzing what already died. We do fiscal stress testing. Imagine your ad agency raises rates by 15%. A traditional manager panics. A SpherNova architect runs a script. By applying a stress factor to the campaign expense table, we can see, in seconds, which activity becomes net negative first. We identify the tipping point before the crisis hits. But how do we know who to credit for a sale? This brings us to attribution modeling. Linear attribution is the fair share model. It gives equal credit to every touch point. It's simple, but it can be blind to the closer. That's why we use time decay attribution. Using a decay function, we give more weight to the interactions closest to the purchase. But watch out, to make this white box, we must use normalized weights. Normalization is your integrity guardrail. It ensures that the sum of credits for a single sale never exceeds 100%. Without normalization, you're double counting revenue and lying to the CFO. Time decay tells you which part of your engine is the spark plug, and which is the piston. We are calling for an end to black box education. We don't need more people who can read a report. We need people who can build the engine that generates it. When you graduate, you will face a choice. You can be the person who interprets the report, the passenger. Or you can be the person who understands the architecture, the pilot. One is a commodity being replaced by AI as we speak. The other is a leader who knows how to harness that AI to build a resilient business ecosystem. The black box is for the passengers. The white box is for the pilots. Which one are you?